Another one, Paul here. Today I'm going to make another video based off of the strategy that I talked about in my last video. The last video I talked about this 8 EMA strategy that I got from a TikToker. I saw the EMAs. You have to have the pro membership in order to apply the strategy, but because you got to use 8 of the moving averages. My last video I showed you how to use it with the stock market. Today I'm going to show you how to use it for crypto. And now the main disadvantage here with doing stock market versus crypto with the same formula is with the stock market you can make money with the options, and you make money when it goes up or down. With this, when you apply it to crypto and day trading, you can only make money when it's going up. So what I'm going to do here is the strategy is pretty simple. You have to have 8 moving average exponentials, and I'll go over them again. It's 20, 25, 30, 35, 40, 45, 50, and 55. Those are the EMAs you need to get the same kind of moving averages. And this works for whichever time frame you want to use. The main strategy is what I mentioned in the last video. Basically, you want to make your 20 EMA stand out from all the other EMAs because that's the one you're going to be following. Like I said, you can only make money when you're in a uptrend, where it looks like it's going into an uptrend. So once you have all the EMAs here, you basically just follow the 20 EMA and see what it's doing. What you want to look for is that collision moment. You want to make that collision moment when it's looking like it's going up. Recently, and I'm on the hour for Bitcoin. We're using Bitcoin as an example. I'll go through a couple cryptos to show you this works for any crypto, any time frame. So I'm going to do that in this video. But make sure your 20 EMA is a bright color, because that you're going to be following that one. So if we look right here on the bottom, let's just go from. You want to look for the point of collision when it kind of collides, like right here. Here is the moment. This yellow line right here that you can see, it collides with all the other EMAs, and if you just follow that EMA, the trend of the candles tends to go in that same direction. And if you just follow the 20 EMA, and once it looks like it's going and once it looks like it's going to have another collision, but it's going to have a collision going up, that's when I would start my day trading for whatever crypto I want. So we see that happening right here. We see the 20 EMA right here on the bottom. The candles tend to follow the 20 EMA on the bottom here. But as soon as the 20 EMA has its collision and it starts going up, so does the candles, and that usually signals when there's a run up. So if you just follow the 20 EMA, it'll lead you into gains, so pretty much. So if we were see right here from Bitcoin, then we're going to do this on a couple spots. Right here, you see the 20 EMA shooting through, having a collision. So if you wanted to get in, do a little day trade right here, you got in right around here, and you just go up. This took 21 hours, and you made 5%, a little bit of 5% on a trade right there. So you have to look for the moments where it's going up, not the moments where it's going down. It happens right here, it goes up here. Well, let's see, you can go anywhere from here to about here, and this is a 2.83% gain. And let's do one more time in this time frame. Let's go a little bit closer to see. Does that? Now this one's a little tricky because it looks like it's going in a collision, but it's not. It's at the top. It's not. It hasn't passed through yet. So where does that happen? Happens right here. This is the moment that it happens. So we see that it starts going up here. So anywhere from here would be a good time to get in because your EMA is going through all the other moving averages. So anywhere from, let's just shrink this down, see if we can get the gains. Okay, I can fit that on my screen. So let's just say it's starting from here to here. So that was a 2%. So let's look at a different time frame real quick. Let's look at the 5 minute. Let's look at the 5 minute. It works for any kind of time frame you want. Let's just go back a little bit. Zoom in a little. It works for, now if you do go for the 5 minute, your gains probably won't be as much as if you did it on the hour, but it still works. So right here we see the 20 EMA down here in the bottom. It passes through, and we just go and we do our day trade around here to maybe up here, and that's under 1% right there. So like the gains won't be as much when you're focusing on like smaller time frames. So you can really see a lot of the dips on the 5 minute. And let's see, let's get this one here. This one looks big. Here we go. Here's a good one. Okay, so we can see the 20 EMA and it's going through. So anywhere here would be a good time to get in for your day trade. So if we got in, let's say right here, rode this out, and that's under 1%. I personally would shoot for the hour time frame because it doesn't look like the gains are that much when you're doing it with the 5 minute. But you still get gains. They're good little scalps if you want to get little moments. But since we're in a bear market, it's really hard to find those big gains. But anyway, let's go look at it. Let's go look at a couple. Let's see, another crypto. Let's do quant. Same thing works for any other crypto. Let's just let's go back on the hour. Okay, here we go. So we've noticed with quant right now on the hour, we see the 20 EMA here and it's pushing through. It's pushing through right here. So this signals a uptrend. So get in anywhere here, and you have made some gains. You made 5.6%. A little pump right there, but now it's going back down. So you guys get the general idea. You use the 20 EMA and you kind of watch it, and whenever it passes through when it passes through and it goes up and it passes through and has a collision, that's kind of the moment to get in for a little day trade. So all you have to do is watch the 20 EMA and you'll see where to get in and get out. But you have to have the pro membership with TradingView because you have to load up 8 moving averages. So anyway, tomorrow I'm going to be going over the stock market. I'm going to be going over a kind of a advanced strategy, and it works really well. And so definitely stay tuned. I'm going to use this advanced strategy. Now, this video I talked about today, you kind of have to, it uses this same strategy. It's like a combo, but it works really well. So I'm definitely going to go more into it because tomorrow I'm going to be going over how to use it for, you're going to need 10 you're going to need 10 moving averages for it to work. So you need the pro membership for it. But I'm going to go over it with the stock market first, and then I'm going to go back into crypto and show you how to use it for both. It works really well. It's really effective, and I'll be teaching that in the next couple days, so stay tuned for that. Anyway, you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.